Do not buy a house until you know exactly what it's going to cost you. Brand the Mortgage Man here, and I've helped more than 10,000 home buyers over my 22-year career, putting me in the top 1% of loan originators nationwide. And something I feel is important to consider when buying a home are the hidden costs that come along with it. Homeownership involves more than just a mortgage payment, and understanding and preparing for the additional costs will help you avoid being part of the 43% of recent homebuyers struggling to make their mortgage payments on time. In this video, I'm going to discuss the hidden costs of homeownership, how much you really need to save before buying a home, and compare owning to renting. So let's get into it. So let's first talk about the hidden costs of homeownership. And hidden cost number one are HOA fees, or Homeowners Association. So Homeowners Association is an organization that manages and governs a residential community. The HOA is responsible for enforcing community rules and maintaining shared spaces such as parks, roads, and recreational facilities. These rules are designed to preserve the aesthetic appeal and property values of the neighborhood by regulating aspects like the appearance of the homes, like the paint colors, lawn maintenance, exterior modifications. In exchange for this oversight, homeowners pay a monthly or annual due to cover maintenance costs and administrative expenses. By upholding these standards, the HOA ensures a consistent and orderly living environment that benefits the community as a whole. And as of recent data, approximately 25 to 30% of all homes in the United States are located within an HOA community. On average, HOA fees typically range from $200 to $400 per month. However, fees can be lower in communities without many shared amenities, or they can be much higher, even exceeding $1,000 per month in high-end or amenity-rich developments, such as gated communities with pools, fitness centers, and landscaping services. The fees collected by the HOA are used to maintain common areas, pay for community services like trash removal or security, and fund the HOA's administrative costs. I personally pay an HOA fee for my home, and the amount is $1,200 per month. This is well above the average due to the number of amenities offered in my community. Hidden cost number two are utilities. When owning a home, there are several utilities that you will typically be responsible for paying, which can vary depending on the location and size of your property. Common utilities include electric, water, which includes sewer services, natural gas, and garbage or recycling services. You may also have to pay for internet, cable, or satellite TV, and phone services if you choose to subscribe to those. Additionally, if you live in an area with stormwater fees, or your home has a well or septic system, those may also be costs you need to consider. Utility bills can fluctuate based on usage, climate in your region, and the efficiency of your home system, so it's important to budget for these ongoing expenses as part of homeownership. When owning a home, utility costs are typically higher and more variable compared to renting. As a homeowner, you're responsible for all utility expenses. Additionally, you may need to pay for maintenance and repairs on systems like plumbing, heating, and cooling. In contrast, renters usually have lower and more predictable utility costs, as landlords often cover some or all of the utilities, particularly in apartment buildings or rental homes. Renters may only pay for electricity, water, and internet, while other utilities like gas and trash removal may be included in their rent. Hidden cost number three is lawn care. Maintaining your home's yard involves a variety of ongoing costs, which can vary depending on the size of the yard, the climate, and the level of upkeep you prefer. Key expenses include lawn care services, if hired, which may cover mowing, fertilizing, and aerating, as well as landscaping maintenance for trimming trees, bushes, or hedges. You'll also need to budget for water usage for irrigation, especially in regions with dry climates or water restrictions. Gardening tools such as lawnmowers and trimmers and rakes may require periodic replacement or repair. Additionally, you might spend money on mulch, fertilizers, pesticides, and seed for maintaining a healthy lawn or garden. If you have a larger property with extensive landscaping, you may also face additional costs for tree care and pest control. These ongoing maintenance expenses can add up, but they're essential for keeping your yard aesthetically pleasing and functional. I have a rather large yard with lots of plants and trees, and I pay $475 per month to have it professionally maintained. Hidden cost number four, maintenance and repairs. Homeownership comes with ongoing maintenance and repair costs that can vary depending on the age and condition of the property, but they are an inevitable part of keeping your home functional and in good condition. Routine maintenance tasks such as cleaning gutters, servicing HVAC systems, replacing air filters, and checking for leaks or water damage can add up over time. In addition to these regular tasks, homeowners should also budget for unexpected repairs, which could include fixing a leak roof, replacing broken appliances, addressing plumbing issues, or repairing structural damage. Many experts recommend setting aside 1 to 2% of the home's value annually for maintenance and repairs. So for example, on a $300,000 home, this could mean saving $3,000 to $6,000 per year. Homeowners also need to plan for major upgrades or replacements over time, such as a new roof, water heater, or flooring, which can require significant investment. Proper maintenance helps prevent costly repairs and ensures the longevity of the value of the home. But it's essential for homeowners to be financially prepared for both expected and unexpected costs. I recently replaced one of my AC units after only 7 years, and the cost to replace that unit was $8,000. Hidden cost number 5, property taxes. Real estate property taxes can increase over time due to several factors, primarily driven by changes in property values and local government budget needs. Property taxes are typically assessed based on the value of the property, so if the market value of your home increases, whether through market appreciation or improvements you've made, your tax assessment will likely rise as well. Local governments may also raise tax rates to fund increasing costs for public services such as education, infrastructure, emergency services, and social programs. Additionally, reassessment periods, often occurring every year, may lead to higher tax rates if the overall value of the property in your area is increased. Some states or municipalities may have specific rules and caps limiting how much taxes can rise each year, but in general, homeowners should be prepared for potential increases in property taxes as both their property values and local tax rates fluctuate over time. At a minimum, you should expect your property taxes to increase in the year following the one in which you purchased your property. Hidden cost number 6, homeowners insurance. Homeowners insurance costs can increase over time due to several factors, including rising property values, changes in coverage needs, and adjustments to insurance rates by providers. As the value of your home increases, whether it's due to the improvements you've made or just general market appreciation, your insurance provider may raise your premiums to ensure that your policy fully covers the increased value of the property and its contents in event of a claim. Additionally, if the cost of construction materials or labor rises, for example, after a natural disaster, the cost to rebuild your home may increase, leading to higher premiums. Changes in local risks, such as an increase in crime, flood zones, or natural disaster likelihood, like hurricanes or wildfires, can also trigger rate hikes. Furthermore, insurers may adjust rates based on their overall claims experience and financial health. Homeowners can mitigate some of these increases by shopping around for competitive rates, increasing deductibles, or making their home more disaster resistant. In Florida, where I live, homeowners insurance has become extremely expensive. My insurance has tripled since purchasing my home 7 years ago. So these 6 hidden costs could potentially make a home unaffordable. And it's important that you've taken them into consideration when preparing for your home buying budget. Which brings me to how much you really need to save before buying a home. The amount of money you need to save before purchasing a home depends on several factors, including the down payment, closing costs, and emergency savings. Here's a breakdown of the key components to help you understand what to save for. First is the down payment. The down payment is one of the largest upfront costs when buying a home. The typical range for a down payment is 3% to 20% plus of the home's purchase price. 3 to 5%, which is for many conventional loans and FHA loans, you may be able to put down as little as that 3 to 5%, especially if you have good credit. 20%, if you can afford to put that much down, you'll avoid paying private mortgage insurance, which is an added monthly cost. A 20% down payment also shows lenders that you're a lower risk borrower. So for example, on a $300,000 home, a 5% down payment would be $15,000. A 20% down payment on that home would be $60,000. Next, you want to factor your closing costs. Closing costs cover various fees associated with the purchase, such as the appraisal, the title insurance, the lender fees, the government fees. These typically range from 2 to 5% of the home's purchase price. So for a $300,000 home, closing costs can be anywhere from $6,000 to $15,000. Next is your emergency fund and additional expenses. It's important to have an emergency fund in place separate from the money for the down payment and closing costs. Most financial experts recommend having 3 to 6 months of living expenses set aside in case of unexpected costs like home repairs, job loss, or health emergencies. This fund will give you peace of mind as a homeowner. Additionally, you'll want to budget for moving costs, homeowners insurance, property taxes, and home maintenance expenses, all of which can add up. In total, you should aim to save at least 6 to 10% of the home's purchase price for the down payment and closing costs, plus an additional 3 to 6 months worth of living expenses for emergencies. So for a $300,000 home, you might need to save between $30,000 and $75,000 depending on the down payment size and other costs. The more you can save up front, the more financially secure and prepared you'll be when it's time to buy. Remember that rushing into homeownership before you're financially ready can lead to unnecessary stress and long-term financial strain. Purchasing a home is a significant commitment that involves not just the down payment, but also ongoing expenses like mortgage payments, property taxes, homeowners insurance, maintenance, and repairs. If you're not fully prepared, you might struggle to afford those costs or find yourself house poor, where much of your income goes toward maintaining your property. Renting for a while longer allows you to build a stable financial foundation, save for a larger down payment, and improve your credit score, all while gaining a better understanding of your true housing needs. It's important to be patient and make your home purchase at the right time. When you've reached a point of financial stability, have a solid emergency fund, and can comfortably manage the responsibilities of homeownership without sacrificing other goals or financial security. If you found this information helpful, make sure to subscribe to my channel so you can continue educating yourself on real estate and mortgages. And make sure to leave a comment below if you have questions about your own scenario. I reply to 100% of the comments left on my videos.